You've probably seen a ton of new financial apps popping up, right? All of them promise to completely change how you handle your money. But today, we're going to talk about one that did something, well, something totally different. We're talking about Varo, the fintech that actually went out and became a real chartered bank. Okay, let's get into it. So you see this logo, you see the app, and you probably think, okay, another digital bank, got it. But Varo isn't just a pretty interface built on top of some old, creaky system. See, back in 2020, it became the very first US neobank to get a national bank charter. So what in the world does that actually mean? For you, for them, and for the future of banking? Let's break it all down. All right, first things first. Why would anyone even switch to a bank like Varo? I mean, what's the big promise? What's the thing that gets people to not just download the app, but to actually move their money over? What's so telling here is that this list is basically a rundown of everything people hate about traditional banks. We're talking no monthly fees, zero overdraft fees, and you don't have to worry about a minimum balance. It's all designed to be fast, controlled right from your phone, and it even has tools for people who need to build up their credit. So the real takeaway is this. Varo's whole pitch is built on getting rid of the headaches of old school banking. Okay, but that no-fee promise, that brings up a huge question, right? If they're not charging you for all the stuff traditional banks do, how on earth are they making any money? How do they keep the lights on? And this really shows you the massive shift in thinking. Your typical bank, they often make a chunk of their money from your mistakes, things like overdraft fees and monthly maintenance charges. Varo's model, it's completely different. Their money comes from interchange fees every time you swipe your card, from their lending products, and from the interest they earn on deposits. So it's a business model built around you using their service, not one that profits from penalizing you. And let's just quickly nail down that key term, interchange. It's pretty simple. Every single time you use your Varo Visa debit card to buy something, the merchant's bank pays Varo a tiny little fee. We're talking pennies, sure, but when you have millions of customers making purchases every single day, well, those pennies add up into a really serious stream of revenue. All right, so if you're going to have a new business model, you're going to need a new kind of engine to power it. Let's look at the tech, because Varo didn't just slap a new coat of paint on a 100-year-old system. Nope, they built their bank from the ground up for the digital age. So instead of trying to build every single piece themselves, Varo basically put together a dream team of best-in-class partners. You can almost think of it like building with high-tech Legos. They've got Temenos for the core banking system, Amazon Web Services for their cloud and AI, Marqeta for the modern card tech, and of course, Visa for the network. This approach lets them be way more agile and innovative than a legacy bank ever could be. And just to give you a sense of the sheer scale we're talking about, Varo says its whole system is powered by the supergraph. Now, that's not just some cool-sounding marketing buzzword. Think of it like a central nervous system for all their data. It lets their app pull your account balance, your transaction history, and your credit score all at once, seamlessly. And get this, that system handles over 500 million requests a month. It just goes to show you, this is a tech company that also happens to be a bank. Okay, now we're getting to the absolute heart of the Varo story. The business model is smart, and the tech is impressive, for sure. But the thing that truly sets Varo apart is its journey from being just another fintech app to becoming a fully independent, nationally chartered bank. And this wasn't an accident. It was a long, deliberate, and pretty groundbreaking journey. They started in 2015, launched 2 years later, just like most other fintechs, relying on a partner bank to actually do the banking stuff. But the massive game changer came in 2020, when Varo finally secured its own national charter. And believe me, that process took years and was incredibly difficult to pull off. To really get why this matters so much, think about it like this. It's the difference between renting an apartment and owning your own house. At first, Varo was renting a banking license from a sponsor bank. It let them get up and running fast, but they were always stuck playing by their landlord's rules. By getting their own charter, they effectively bought the whole house. At owning the house, well, that changes everything. Suddenly, Varo can set its own rules. It can hold customer deposits directly, it can create and issue its own cards, and, this is the big one, it gets to keep a much larger slice of the revenue pie. It puts them in total control of their products, their profits, and their future. So, let's recap. We've got a no-fee model, a cutting-edge tech stack, and a full-blown national banking charter. But why does any of this actually matter? In the grand scheme of things, what's the real impact? Well, for starters, let's just talk about scale. Varo is not some tiny niche player. We're talking over 5 million cards out there in the market. That alone tells you that their message is hitting home with a whole lot of people. But, and this is where the story gets a little more complex, while they have millions of customers, the total amount of money held by the bank is around $275 million. Now, obviously that's a ton of money, but when you divide it across 5 million customers, it starts to tell a really interesting story. What that number seems to suggest is that for a lot of users, Varo might not be their main bank just yet. It's maybe not where the paycheck goes or where the mortgage gets paid from. And that really highlights the single biggest challenge for every neobank out there. How do you go from being a cool, useful secondary account to becoming someone's core financial hub? So it really comes down to understanding who Varo is truly built for at this moment. It's for anyone who feels like they're being overcharged or just plain ignored by the traditional system. It's for people who need a real path to build their credit. And of course, it's for a generation that just expects to manage their entire financial life instantly from the palm of their hand. Which leaves us with one last really big question. Varo proved that it's possible to build a nationally chartered bank from scratch using modern modular technology. They just went around the old systems completely. So is this the blueprint? Is this what all banks are eventually going to have to become if they want to survive? Now that is something we're all going to have to watch.